very first thing I want to talk about is the Market Action Index. This answers how's the market by comparing the rate of sales versus the current inventory. As you can see, we're in a strong seller's market. The higher the number, the stronger we are in a seller's market. Home sales continue to outstrip the supply, and the Market Action Index has been moving higher for several weeks in a row. This is a seller's market, so watch for upward pricing pressure in the near future if that trend continues. A couple of key things to note here. As you can see from the trend, whether or not we are in a buyer's and seller's market, this chart is great because it has 4 different lines. The top 90 day, so this will be the upper quarter of the market. The next is the upper 90, then the lower 90 and the bottom 90. So those are the 4 quartiles. As you can see currently, based on the Market Action Index, remember the higher the number, the more demand in that price point. That would be defined as median prices of $743,000. That's going to roughly get you a 2,800 square foot house on under a half acre, typically a 3-bed, 2-bath, couple years old. Those are typically on the market, days on market of about 38. The next band, which is measured by the light blue line, as you'd expect at a lower price point, there's a lot more demand in that price range. That median price is $525,000, roughly 2,100 square feet, 1 to 2.5 acres, typically a 3-bedroom, 2-bath, a year or more old. We've absorbed since the last report 5 of the houses in that category, but 2 houses hit that market, taking a little longer to sell in that price range. But as you can see, there is a lot of demand in that upper 90 on the Market Action Index. The next band down, highlighted by the yellow, which has the highest ranking right here in that category, that has the most demand and therefore the least inventory. That's going to typically be a house in that $403,000 price range. Again, somewhere around 2,100 square feet on 8 to 10,000 square feet of a building lot, so under a quarter acre, 3-bedroom, 2-bath. A little bit older houses in that category, typically about 11 years old. 2 new houses hit the market in that last reporting period. 3 of them were absorbed, and they're typically the fastest to go in under 28 days. Finally, as you can see, the bottom quartile right here, that's typically houses that average $248,000 in price. That's about a 1,700 square foot house, quite a bit smaller building lot, 6,500 square feet to 8,000 square feet, 4-bedroom, 2-bath. What really separates this category is the age of houses, 73 years average as a median. So the older houses, have they been maintained? What kind of condition are they in? What type of water, sewer, and electrical concerns do you might have? And they're on average 91 days. And the reason for this is people don't typically want to be in this age of a house, but however, in our growing and demanding market, that's all that people can afford, unfortunately. So you can see really great stats, really good information. If you pay attention to these trends, this can surely show you the direction that things are heading and how are we trending. Is there going to be more demand in each of these different price categories and market segments going forward? Only time will tell, but as you can see, very, very interesting. And if you go back in time to where were we last, or 2 Julys ago, as you can see, significantly less across the board, roughly half of the Market Action Index at those times. Last summer, about where we are right now, then the market kind of slowed down and kind of fell off the face of the earth with winter. And then we also had a big slowdown because interest rates. So this was about the time here interest rates started rising very heavily. They got above the 5% mark. Most people gave up and stopped looking. And then as you can tell, this is a lot of it cyclical in nature with weather as well. So very interesting statistic, very interesting information from the Market Action Index. A couple other quick things we wanted to talk to you about. I think it's really important to look at inventory. As you can expect, inventory is going to be in sync with everybody else. As you can see, the 4 different categories are going to move exactly the same because really the inventory is an aggregate of each of those. So where were we a year ago? We had 1 year ago this month, 16, 17, 17, and 17. So we're at 70 houses on the market roughly. Started getting a little bit more inventory as interest rates started to rise, and then guess what? Systematically all the way down. Even with higher interest rates, we are seeing a dropping of inventory, and currently right now we have 12 and 13, so 25, just under 50 total houses in that 41 range. Really interesting as well. The other thing that I think is really important to compare, price per square foot. This is something else that's really important, and you'd expect when you get to that top 90-day range up there in those upper areas, you're going to see a higher per square foot price. So it depends on which market segment that you're looking to buy in. This will give you a good indicator on where houses are trading right now. Interestingly enough, that you're paying more at the upper end stuff price point wise, just because there's less buyers in that market. And then once you get all the way down here to the lower quartile, there is a big drop off in that bottom 90-day average. Those older houses are still getting in today's market. So how did that compare just a year ago? Looking back here, July 1st of last year was 189 upper range, 247 in that next quartile, 205, and the bottom range is 133 per foot. And then as you follow it all the way back, you can see as low as the 120s per foot into the 118 a foot range in April of last year. So here we are 16 months later. And then the other interesting thing that you would expect, average days on the market, the stuff that's been sitting around in that higher, more expensive stuff is taking longer to sell, but that 90-day for the bottom is right in that 97 days on market. So way less than any other category. That stuff's getting gobbled up pretty quickly. There is a lot of first-time home buyers and a lot of people that are sick of renting. We see that trend growing as well. And then the amazing thing is here, average days on the market was as low as 86 for that lower 90-day band. And now, as you can see, it's already jumped up. So interesting statistics. If you have any questions, we'd be happy to walk you through it. But really good intel, very good statistics for all of you numbers nerds out there. Or if you just want to see why the market is so hot right now, lots of really good factors. So if you're curious about any of this, if you want somebody that has the expertise to walk you through it, that can explain it to you, and more importantly, how you can strategically benefit from your offers and from your sales with this data, we would be happy to help out. So give us a call at Proven Realty. Experience, service, results.